It's now to talk about what's working in the markets. Gabriela Santos, global market strategist at J.P. Morgan Asset Management. You and Druck with the financials, Gabriela, Stanley Druckenmiller. Some pretty good company. But so explain how they're not mutually exclusive, I guess, tech and financials. But how does it factor into your thinking?
That's right. Good to be with you, Joe. So I think what's really working in the markets is to realize that we've entered a third phase here of this new market cycle. The first was all about the virtual world from March to early November. Then we started a new phase from early November to early April, all about the return of the real world. And now we're in a third phase where we're thinking a lot more about the expansion. What do the next few years look like? There is going to be a moderation in growth coming back, with the U.S. economy settling back to its more normal growth pace of 2%. So that's where something like technology and growth themes come back into play. A second aspect of the new cycle is a lot more upside risk to inflation, something we have not had over the past decade, that argues for continued steeper curves. That's where a sector like financials comes into play as a way to hedge against inflation and tap into this change in the cycle. And then there's a third aspect to this also, which is thinking about where in other markets we're still in an earlier phase of the market cycle, where enthusiasm for the recovery is just starting to build. And this is where we come to the conclusion that it makes sense to have an overweight at this moment to more cyclical regions like Europe and Japan, so to complement this U.S. exposure as well.
A couple of times we've seen that some of the biggest winners during the pandemic, they've seen a little bit of disappointment in how, I don't know, I'm thinking of maybe a Netflix or a Disney or something. You would think Disney's the greatest reopening play in the world, and yet Disney Plus still affects what happens with the stocks. They all seem, maybe you could make the case that they've gotten ahead of themselves. Although some, as you point out with technology, they're going to keep the gains made during the pandemic and just add to them from here on out. But they've all run up a lot. You need to factor that into your thinking.
I think so. I mean, it comes to the point where you do need to consider valuations once again. And I think we're really at a phase where it's, we're talking broad sectors here, tech, financials, but it really becomes much more of an intra-sector conversation. Where are valuations attractive or not based on each individual stock? Which companies are competitive in this new expansion or not? Which ones are price takers? Which ones are price setters? So we're really in a much more mid-cycle mature phase where it's really a lot more about intra-sector, company-by-company differentiation, at least here in the U.S., where we're in a much more advanced phase of the market cycle.
Shepard Smith here. Thanks for watching CNBC on YouTube.